Good afternoon, everyone. This is Roman Shersher, your number one online resource for buying property with this week's episode of Buy, Invest, Sell. Please visit our new podcast if you want to listen to us in the car, or if you want to replay it. You could also replay it on Facebook, of course. It's the end of January already. It's 31st of January. We have some interesting news to report, and I'm going to go ahead and go over it. Please remember, if you wouldn't mind, hit the share button, hit the like button, share it with your friends and family. It tells us to continue doing these again. And also, if you, as you know, at this point, I bought and sold over hundreds of homes at this point. I originally got into this business because I was flipping homes myself, and while I was flipping homes, I got my broker's license because it was helping me save a lot of money on the buy side with the volume we were doing. Having said that, at this point, with the hundreds of properties that I've bought either for myself or for my clients, I wrote a book specifically on tips and tricks on how to get the best deals and how to save tens to hundreds of thousands of dollars. Depends on which market you're in. In LA, it's hundreds. In Jacksonville, Florida, you're going to save tens of thousands of dollars. And I'd love to share it with you, the ebook for free. Just please go ahead and direct message me. Let me know that you're interested in it. I'd be glad to share it with you for free. Love to help you in your endeavors. If you're looking to buy and sell, like I said, we will be, through our experience, Leon and I, we have joined over 25 years of experience in this business. Hundreds of homes that we bought and sold. Would love to help you in your endeavors as well. The market has shifted. It's a different market than it was just a couple of months ago. It's I wouldn't say a little bit hotter, but the numbers show something different across the country. That's why it's important you know your local market here directly in your backyard. So without further ado, let's go ahead and jump into our content. We have a lot to go over today. First things first is recent market data shows a little bit of a shift in the market. Mortgage demand has gone down, and the reason why, the rates have changed significantly. In last month, we saw pending home sales decrease. It dropped about 5.5% in December, following 4 consecutive months of increases. So pending home sales had increased for 4 consecutive months. In December, that slowed. The main culprit for that, and I'll go over the specific numbers in the different regions of the country, but the main culprit for that is because mortgage demand dropped as the interest rates rose. In December 6th, the average interest rate for a 30-year fixed mortgage was 6.68%. By December 19th, that had climbed to 7.14%. That's over a half a point. Slightly under a half a point, 0.46 basis points difference in a little bit over 2 weeks. And so that was a big culprit, as 7% is kind of this threshold that people have this mental barrier block in. And so when rates go up back over 7%, it creates problems and it slows down pending sales. Now, how much did it slow down? Well, pending sales on the Northeast had dropped 8.1%. So that's New York, Boston, Massachusetts, Northeast, 8.1%. Okay. The Midwest saw a 4.9% decrease in pending sales. The South had the least at 2.7% decrease, but the West, it really affected sales in the West at 10.3% decrease month over month in terms of pending sales. Now, in Los Angeles, what did the wildfires do? Well, wildfires were a major contributor to the reason that the West had slowed down and we saw less pending sales. let's talk about the actual impact of these fires. The Palisades and Eaton fires, the median home values in these areas, in the Eaton fire, the average median home price for a home that was destroyed there was $1.3 million. In the Palisades fire, it was $3 million. And so just the designated fire boundaries affected residential properties to a value of over $40 billion, $40.3 billion. 15,841 properties in total were affected, of which 12,941 were destroyed and 1,988 were damaged. Okay. In total, that's about 0.9% of all LA County residential properties were destroyed, nearly 1%. And we lost 2% of the total property value in LA County. The damage and the destruction was out of this world. 2 of the top 5 fires in the last 100 years were at the same time during the Eaton and the Palisades fires. And the top meaning did the most destruction. Active listings in the fire-affected areas dropped significantly, naturally. And the broader LA market saw listings during that time, though, go up a little bit from 6,000 to 6,700, 6,089 to 6,743 during that period. So we had more properties come to market, but it really put a pause on the LA market. Not only were the people that had lost their homes affected, and those properties and those transactions were paused, but everyone else didn't know what was going on, and a lot of people knew people that were affected, and everyone was waiting for the dust to settle to see, first of all, whether the fires would expand into their regions. I know where I live, about 10 minutes away, that's how close we were to the fire, to being evacuated. Our boundary was just about 7 minutes from here. We could see with our own eyes flames. That's how bad it was. So that affected the West Coast, and one of the reasons the pending home sales were so significant here in rates are right now. So the mortgage rates have come down slightly. Last week, they were at 7.11% for the 30-year fix. It's now gone down to 7.05. The 15-year fix was 6.51. It's now 6.46, came down 5 basis points. The 30-year jumbo went from 7.37 down to 7.32. So we've had about 5 basis points reduction, 5 to 6 basis points reduction in the last week. Nothing significant at all. Meanwhile, the Fed has come out and stated that they will not in this period reduce the interest rate on the Fed's funds rate, lowering rates on the Fed side. So what does this mean for us? What are the market dynamics that we're dealing with now here? Oh, let me go ahead and there we go. Market dynamics say this. Mortgage applications decreased by 2% from the previous week. Obviously, we're still seeing residual mortgage demand reductions as a result of these interest rates. Housing starts, however, they went up significantly. Housing starts increased nearly 16%, 15.8% month-over-month in December, which shows less of a reluctance to build new houses, but that's still significantly lower from 1 year prior. And so what does this mean? Number one is it's showing some slowing activity. The decline in pending sales and mortgage rates and applications show a little bit of a cooling market. Okay, we have fires that are still impacting the local market here in Southern California and Los Angeles. We're seeing still somewhat of a pause. However, this last week we're out and about. We have clients that we're constantly looking at. Today we actually, yesterday we were actually at a property in Westlake Village, and it was a fixer, so there was profit potential there for the right buyer. There was a steady stream of about 20 people that walked through this property. So we're seeing some increased demand in localized markets. Okay, we're seeing some new construction showing strength, so people are less reluctant to come out there and build now. And the rates in the last week have shown a slight improvement. So that's supporting the market activity. All right. So what's my advice? Well, my advice is this: if you're a buyer, although the market activity has slightly slowed in certain local markets, competition is still strong. I'm still seeing a lot of competition for the properties in demand. We have a property that we put on the market just last week. It's a townhouse. And that townhouse had actually been on the market. We got 2 offers here in the first week. So the buyers are starting to come out. Consider working with lenders and offering buy downs, okay, and asking for a buy down if you're a buyer. And that'll help you with your initial rates for the first 2 years while we wait for the rates to come down further. If you're a seller, I'm going to repeat what I said last week. Pricing position is key, okay? It's crucial right now. Work with local experts who know how to price it correctly in order to get the people in order to get the offers, because you'll make more money if you get multiple offers dealing with counters and negotiating back and forth and creating a bidding war than you will listing it for $1,050,000 as opposed to $999. Okay, significantly you'll make more money doing that. So work with people that know how to navigate these waters, that know how to navigate the current market. If you have any questions, please reach out. We'd love to help and give you either tell you what we think that you should price your property at, give you, like I mentioned, my free ebook, and give you a consultation. No obligations, obviously. All right, quote of the day. Quote of the day is a Chinese proverb. The best time to plant a tree was 20 years ago. The second best time to plant a tree is now. So this quote tells us that, look, although market conditions may change, the opportunity to invest in real estate is still strong. We're not seeing any forward indicators. You can't really predict what's going to happen in real estate for more than a year, maximum 18 months, 12, 24 months if really things are steady. But there are no indicators that real estate is going down in value. There's only indicators that real estate will continue to increase. And so investing in real estate is in the present is a very good idea. Plant your tree now. All right, thank you guys for joining. Remember, if you like this video, help spread the word on social media. It helps us so much. Just tap the share button, send it to your friends and family. Really appreciate you joining us here. Remember to check out our new podcast where you can listen to this content. I give you the raw data as to what's going on in the market, not opinion, not what hearsay, this and that, what you hear. A little bit of opinion every now and then from me, from my experience, but it's based on experience. But I prefer to give you the raw data, and that's what we did here today. Thank you for joining us for Buy, Invest, Sell, a broker's formula for real estate success.